Hello students, welcome to the homeschools. I am Mr. Sharan here. In the previous video, we discussed about what is accounting and what are the features of accounting. Just to glance on it, accounting has a different steps that we discussed as a features. That is, accounting is a process of recording, classifying, summarizing, communicating all the accounting transactions. So that video, it was explained in the earlier. Now in this video we are going to discuss about the basic terms of accounting. Remember, basic terms of accounting has been divided into two different videos because it has a more number of terms to understand. As I told earlier in the first video, that is in the first chapter of accounting of your first PUC, that is Introduction to Accounting, the very important concept to understand for your further accounting knowledge is basic terms. So in this video we are going to discuss about the 7 important basic terms which are used in accounting, and in the next video we are going to discuss about all the remaining basic terms. Okay, so as you see here, basic terms used in accounting. Now the first is what? The transaction. So the transaction means it's simple. Exchange of goods or services with the money. Exchange of what? Goods or services with the money. Take an example. You have the provision store. You are running a provision store. I am a customer to you. I will come to your shop and buy some groceries. Say an example, I will buy some rice of a 10 kgs. You are charging a 50 rupees per kg. So I have to pay you 500 rupees and you need to give me a 10 kg of a rice. So here we both are exchanging the goods with the money. You are giving me the rice and I am giving you the money. So this process of exchanging the goods and the services with the money is called what? Transaction. Hope you are able to understand it. Now in the transaction we have 4 different types of the transactions. So first one, we have a cash transaction, then we have a credit transaction, then we have a barter transaction, and at last we have a paper transaction. Okay, so cash transaction. Simple. Cash transaction means receipt or a payment of a cash happens immediately. Continue with the same example. I am a customer in your shop. I will buy a 10 kg of a rice in your shop. So how much you are charging per kg? 50 rupees. Means to say that I have to pay you a 500 rupees. I will buy the rice from you and I will pay the cash to you immediately. That is a cash transaction. Here receipt or a payment of a cash happening immediately. That is a what? Cash transaction. Second one, what we have here? Credit transaction. Simple. The difference between the cash transaction and the credit transaction is that in the cash transaction, payment or receipt of a cash is happening immediately. But in a credit transaction, payment of a cash or a receipt of a cash is happening in the future date. So if I pay you the 500 rupees after some days, say an example, on the 1st January 2023, I bought a 10 kg of rice from you, and I will tell to you that, so I will pay you after 10 days. I already bought a rice from you, but I am not paying the cash to you. When I am paying after 10 days, here receipt or a payment of a cash is happening after 10 days in a future date. So that type of the transaction is called as what? Credit transaction. It means you are giving me a rice of on the basis of credit. You are giving the rice to me on the basis of what? Credit. Okay, so cash transaction, receipt or a payment of a cash is happening on the immediate basis. Credit transaction means receipt or a payment of cash is happening on the future date. Third type of the transaction, we have a barter transaction. Barter, you might heard this word already, the barter. In ancient days, before the concept of a banking, we had a concept of what? Barter system. Barter system means here we are not exchanging the goods with the money, we are exchanging the goods with the another goods. In the ancient days, what they used to do? They used to do that you have a one good which is required for me and I have a one goods which is required for you. So say an example, you have a access of a rice with you, you will need a wheat. I have a access of a wheat with me, I need a rice. So what we can do, I need to give you a wheat, same quantity of the wheat what I have given it to you, you need to give me the rice. Here we are exchanging the rice and a wheat. This type of the transaction is called as what? Barter transaction. In a barter transaction, exchanging of the goods with the another goods. Okay, so cash transaction, here receipt or a payment of a cash is happening immediately. Credit transaction, here receipt or a payment of a cash is happening in the future date. Barter transaction, here we are exchanging the goods with another goods. Last we have the paper transaction. Here there will be no question of a receipt or a payment, but we need to show in the books of account about that transaction. That is called as what? Paper transaction. Say an example, you bought a vehicle, say a car, which is worth of a 5 lakh rupees on 1st January 2023. After 2 years, that is on 1st January 2025, you need to buy one more car by selling the old car. You bought it for how much? 5 lakh rupees. Now you wanted to sell this old car and buy a new one. So at the time of selling the car, I think you know that the value of the car will not be same. It will be reduced. So if you go to the market to sell the car, they will not ask it for 5 lakh rupees. They will ask it for 3.5 lakh rupees, because that 1.5 lakh rupees is reduced. That is called as what? Depreciation. Here we are not charging the cash for that. Just we will sell the car and receive the 3.5 lakh rupees. For how much we bought it for? 5 lakh. Now how much we are getting it? 3.5 lakh rupees. So this 1.5 lakh rupees, here we not exchange the cash, but in the books of accounts we have to show that. That is called as a what? Paper transaction. Here there will not be a question of exchanging the cash or giving or receiving the cash, but in a books of accounts we need to show that the transaction. That type of the transaction is called as what? Paper transaction. So transaction is exchange of the goods or services with respect to the money. That is a transaction. Okay, so next we have the cash transaction. In that transaction we have 4 types: cash transaction, credit transaction, barter transaction, and a paper transaction. So cash transaction means what? Here receipt or payment of a cash is happening on the immediate basis. Credit transaction means here receipt or a payment of the cash is happening in the future date. And barter transaction means here we are exchanging the one type of the goods with the another type of the goods. And a paper transaction means here there will be no question of a cash payment or cash receipt, but that transaction we are going to record in the books of accounts. So depreciation is one of the example for paper transaction. Even discount is also one of the example for paper transactions. whether it may be a discount allowed or a discount received. These are all the examples of what? Paper transaction. Now the next we have a business entity. So business entity concept or a business entity says that, so you are running the provision store. Okay, so you cannot run the provision store without a name. There should be some name on it. Okay, so that the people are going to recognize your shop with that respective name. That is what? Business entity. Entity in the words, simple words, we can say that entity is a existence. Business entity means the business is existed. Okay, so remember one thing, under the business entity, we need to enter all the transactions in the business point of view only. Business entity, you have to enter all the transaction in the business point of view itself. Okay, so then we have a third basic term is what? Proprietor. Proprietor is a owner of the business, which he brings a capital to run the business. So proprietor, or we can say owner. So you are running with the provision store. So you invested a money in it. So you are called as a what? Owner of the business, or we can say proprietor of the business. Remember, a proprietor can invest in a firm not only in the form of a cash. He can invest in the form of a cash. He can invest in the form of a goods also. He can invest in the form of a asset also. Okay, so say an example here. Just take out an example. So proprietor, you have a, or you wanted to open a provision store. What you will do, you will have a 2 lakh rupees cash with you. You will have what? 2 lakh rupees cash with you. And you have a shop. You have a own shop. You don't want to buy the rented place. You have the own shop with you. So that building value cost of rupees 2 lakh. The building value is cost of rupees what? 2 lakh. Now you have the idea to start a provision store. Without a groceries, you cannot start a provision store. Now you will buy the groceries from the farmers of rupees 1 lakh. Since it is a newly starting business, you don't want to invest more on the goods. Okay, so you have the cash of rupees 2 lakh and you have the building. In the same building you wanted to run the business, that is of 2 lakh rupees. You bought the goods from the farmers which you need to sell to the customer. The value of that goods is what? 1 lakh. What is the total value here? 5 lakh rupees. Okay, so this total 5 lakh is called as what? Capital. Only 2 lakh is not called as a capital. 2 lakh plus 2 lakh plus 1 lakh, that is a cash plus asset plus goods. Total worth is called as what? Capital. So the capital means the amount which is invested by a proprietor to run the business. So that is a next basic term, capital. Okay, so business is a legal existence. Proprietor means the owner of the business who invested a capital to run the business. Capital means the amount which is invested by the proprietor to run the business. That is a capital. Remember, capital doesn't mean that it is only in the form of a cash. It will be in the form of a cash. It will be in the form of bank account also. It will be in the form of a goods. It will be in the form of a asset. All the collectively total worth is called as what? Capital. Okay. The first basic term is what? Transaction. In that we have 4 types. Cash transaction, where the receipt and the payment of a cash is happening immediately. We have a credit transaction, where the receipt or a payment of a cash is happening in the future date. Third one, we have a barter transaction, where we are exchanging the one goods with another goods. Then we have a paper transaction. Here there will be no question of a cash, but that type of the transaction we are going to enter in the books of accounts. So these are all called as a different types of the transactions. So next we have a business entity. Business entity means a legal existence of the business. Next we have a proprietor. Proprietor is a owner who invested a capital to run the business. Capital is the amount which is invested by a proprietor. Again, I'm telling you, remember, the capital doesn't mean that it should be in the form of a cash only. It will be in the form of a cash also, asset also, at the same time goods also. Then we have a drawings. Drawings means a cash or a goods which is withdrawn by a proprietor for the personal use. For what? The personal use. Okay, so continue with the same example. You have the provision store which is running by you. Okay, now you need to pay some personal expenses. You need to pay some personal expenses, say a school or a college fees of your children's. Now what you will do, you will take out the money from your business, say 25,000 rupees. In your business, you have a cash of rupees 1 lakh. In that 1 lakh rupees, what you will do, you will take out a 25,000 rupees for your personal use. What is the personal use? You need to pay your children's school fees or a college fees. Okay. So what you will do, you will take out the money from the business and pay for your personal. So this amount of a 25,000 is called as what? Drawings. Drawings means the amount withdrawn by the proprietor for the personal use. Now you might have a question that is only the cash is withdrawn by a proprietor for a personal use? No. Proprietor even can withdraw the goods also. Okay, so in the same example, you have the provision store. Now you want a 25 kgs bag of a rice for your home to consume it. Now what you will do, you will not buy from some other shop. In your shop only you will take out a one bag and you will use it for your house. Why this is called as a drawings means that one bag of rice what you bought is already accounted. In the sense you bought it from the wholesaler, that already you entered as a purchased. Now that one you are withdrawing for your personal use. So drawings can be a cash also, at the same time drawings can be a goods also. So that is called as what? Drawings. Drawings is the cash or a goods which is withdrawn by the proprietor for a personal use. Okay, that is a drawings. Again you might have a question that can he withdraw the asset? Yes, he can withdraw the asset also, because he, say an example that you have the one two-wheeler which is purely for your business. Now you felt that that two-wheeler is no longer necessary to run the business. Now what you will do, that goods or that vehicle you will take it from the business and you will permanently use it for your house or your personal use. So that is also become the drawings. So these are the first 5 important basic terms to understand. That is the transactions, business entity, proprietor, capital and the drawings. Hope you are clear with all these concepts. Next 2 important basic terms are what? Assets and liabilities. Assets. Assets in simple words, the valuable things which are using to run the business. Valuable things. These are all called as what? Asset. So in that we have a 4 different types. Okay, even along with this we have a current assets as well as the fixed assets also. Okay, so now we have a tangible asset. Asset means what? The valuable things which we are using to run the business. Anything which is valuable is a asset. Say from the computer system which are using to run the business up to the human resources, means the employees, everything is called as a what? Asset. So first one we have a tangible asset. Tangible asset means that tangible. You already know what is the meaning of a tangible. Tangible means what? Which we can see and touch. That is a tangible. Tangible assets means the valuable things in the business which we can see and touch. That is a tangible asset. Say an example, machinery is a tangible asset. Machinery is an asset because we are using that machinery to run the business. It has some value. Say 10 lakh, 20 lakh, 30 lakh, like that. So machinery, furnitures and fixtures, building, computer system, goods. Okay, so in your business, that is a provision store, rice, wheat, all those things will become a tangible assets, which there is a physically existed. Now the second one is what? Intangible asset. Intangible asset means intangible, which we cannot see and touch, but we can experience the value. That is intangible asset. The four very important types of the intangible assets are goodwill, we have a copyright, we have a trademark. All those things are considered under the intangible asset. Goodwill, trademark, copyright, all those things comes under the intangible asset. So tangible asset and intangible asset. Then we have a amount due to the business. Amount due to the business. This you can relate it to the credit transaction. Amount due to the business, you can relate it to the credit transaction. What is a credit transaction? Credit transaction means that here there is an exchange of a cash happening in the future date. Okay, so say an example, I came to your shop and bought a 10 kg of a rice. You need to give me a 10 kg of rice so that I have to pay you a 500 rupees. 10 kg, that is 10 kg of rice into 50 rupees each. Total I need to pay you 500 rupees. I will tell you that I don't have the money now. I will pay you after 10 days. I am buying the rice now, but I am paying the cash to you after 10 days. Okay, so now I have a amount to pay you for your business, amount due to the business. You know that you have given a 10 kg of rice. There is amount due to you, in the sense due to your business. So this is a type of a asset. Anything, if you sold the goods on the credit basis, later you need to receive the money. That is amount due to the business. That is a type of a asset. So whom I call now? I called as a debtor to you. I called as a what? Debtor. Simple. The debtors are the persons from whom a business needed to receive the money. I have taken some benefit from your business. What is the benefit I have taken? I have taken a 10 kg of rice from your business. Since I have taken a 10 kg of rice from your business, I need to pay the 500 rupees. Okay. So 10 days I have taken a time. This 10 days, there is an amount due to you. What is that? 500 rupees. So that is also called as a asset. Tangible asset, intangible asset, amount due to the business, and last we have a fictitious asset. Fictitious asset in the sense the expenses paid in advance is a type of a fictitious asset. Expenses what? Paid in advance. Assume that you need to pay some expenses in the next year. Related to that, you paid expenses now only. That is called as what? Fictitious asset. Say an example, salary paid in advance. Salary is expenses to the business. Okay, so there is a one worker in your shop. He asked the advance salary. So you will pay that salary, 1 year salary to him in advance. So that is a type of what? Fictitious asset. Hope you are understanding the concept. In the asset, we have a tangible asset, intangible asset, amount due to the business and a fictitious asset. You might be thinking that there are two more very important assets, that is a what? Current assets and a non-current assets. Say an example, the fixed assets. Current assets, or even we can call it as a non-current assets or fixed assets. Two types of the assets we have. Now, current assets. What is a current asset means? The cash related to the asset is cashable or convert into cash within 1 year. Or say an example, the goods or a rice, whatever it is in the provision store. Okay, so that is a current asset. You are selling the rice and receiving the cash immediately or within a less than 1 year. So that is a current assets. The asset which the cash is associated with it and that we can convert into within 1 year. That is a current assets. Then we have one more type of the asset, that is a fixed asset. Here the cash is associated with the fixed assets is not for less than 1 year. It is for more than 1 year. Say an example, the machinery. The total value of the machinery is at 10 lakh rupees. Now that 10 lakh rupees, the cash is not associated with it within 1 year. So that is a fixed asset. So the example of the fixed assets are machinery, furniture and fixtures, building, plant, land, all those things are comes under the intangible assets. So these are all the types of the assets. So what is the first basic term? Transaction. Transaction means what? Exchanging of the goods or services with respect to the money. We have a four type of the transaction: cash transaction, credit transaction, barter transaction and a paper transaction. Cash transaction. Here the exchange of the goods with the cash is happening immediately, or we can say the receipt or a payment of a cash is happening on the immediate basis. In the credit transaction, the receipt or a payment of a cash is happening in the future date. Barter transaction, here we are exchanging the one goods with another goods. Paper transaction, here there will be no question of a cash, but that type of the transaction we are entering into the books of accounts. Then business entity. So business entity is the existence of the business. Proprietor, the person who invests into the firm or a business. The owner of the business is called as a proprietor. He can invest the capital in the form of a cash also. He can invest the capital in the form of a asset also. He can invest in the form of a goods also. So proprietor is the owner who invests the capital in the firm. Now capital means amount invested by the proprietor. Then drawings means the cash or a goods or a asset withdrawn by the proprietor from the business for the personal use. That is a drawings. Next we have what? Asset. Anything which has a value is a asset. That may be tangible asset which we can see and touch. Intangible asset which we cannot see and touch. Then amount due to the business. Example, debtors. You sold the goods on the credit basis. In the future date they need to pay you. So they are all the debtors. Then fictitious asset, preliminary expenses or discount on issue of shares. All those things comes under a fictitious assets. Then we have the current assets. The cash is associated with the asset within 1 year. The cash is associated to the asset more than 1 year. Last we have a liabilities. Liabilities means simple obligations to pay. Amount due to the business is a asset. Amount due from the business. Amount due from the business means your business need to pay to them. That is a liability. So assume that you bought 100 bags of rice from the wholesaler. 100 bags of rice from the wholesaler. Okay. So say an example, one bag is costing 1,000 rupees. You need to pay him how much? 1 lakh rupees because you bought 100 bags. What you will do, you will tell to the wholesaler that I will pay in the future date. In the sense, your business need to pay them in the future date. Your business is amount due from your business. You have a due to pay to the wholesaler. That is what? Liability. In other words, I can say it is a obligations to pay. It is what? Obligations to pay. That is a liabilities. In this liabilities, we have two types. We have a current liabilities and a non-current liabilities. Current liabilities in the sense, anything which the business has to pay within 1 year. Short-term borrowings. Say an example, you have taken a loan from someone. You have some business problem. What you will do? You will take a loan from someone and you will tell them that you will pay the loan within 1 year. That is a short-term borrowing. That is a type of a current liabilities. Okay, so continue the previous example. You bought 100 kg of rice and 100 bags of rice, and you told him that you will pay that 1 lakh rupees within 6 months. That will become what? Current liabilities. You are paying within 1 year. Anything business has to pay within 1 year is a current liability. Non-current liability, more than 1 year. The best example is what? Bank loan. You have taken a loan from the bank and that loan you need to pay after 1 year. Means you can pay regularly, but you are going to clear that bank loan not less than 1 year. It takes 2 years, 3 years, 5 years. So anything the business need to pay for a long period of a time, that is a non-current liabilities. What we can say, the long-term borrowings. Short-term borrowings means the amount borrowed from someone for a short period, for less than 1 year. Long-term borrowings mean the amount borrowed from someone for more than 1 year. So this is the liabilities. Hope you understanding the accounting concepts. So in this video, we discussed about 7 different type of the basic terms. Now in the next video, we are going to cover all the remaining terms of basics which we are using in the subject of accounting. In the first video, we discussed about the overview of PU accountancy. In the second video, we discussed about the meaning and the features of accounting. In the third and fourth video, we are going to discuss about the different basic terms of accounting. So here we have a third video, all the different 7 type of the basic terms, and in the next video we are going to discuss about all the remaining basic terms which we will use in the accounting. Thank you, students.